the great thing about 30-year fixed mortgage is
that's something I think is just tremendous, because you really don't see, I mean, that's the number one concern I see with many of our clients is
if you seek cash flow, you're probably not going to get that wealthy.
Chris Miles was able to retire twice by the time he was 39 years old, but he's not content to just enjoy his own financial freedom and peace of mind. Chris wants you to have your own ripple effect so you can live free today. He's not the financial advisor you expected. He's the anti-financial advisor you deserve. He's jumping behind the mic right now, ready to make waves. Here's Chris Miles.
Hello, my fellow Ripplers. This is Chris Miles, your cash flow expert and anti-financial advisor. Welcome to our show. It's for you that works so hard for your money and you're ready for your money to start working harder for you today. You want to become work optional, where you work because you want to, not because you have to, where you not only just get rich, but you want to create a rich life where you can actually create that time and that freedom to be able to be with those you love, doing what you love. Guys, thank you for tuning in today. Thank you for being a part of this show, because guys, honestly, without you, I couldn't create a ripple effect throughout your lives. Thank you for being a part of this. And if you guys want to be able to learn more and go deeper down this rabbit hole of how do you create more passive income today, or even how you can actually get that max ROI infinite banking policy, not like the crap that's sold out there today, you can go check out our website, moneyripples.com, for more information. Okay, guys. So today I've got a special guest.
Chris, sorry, I'm going to interrupt. I really like that intro. I definitely I have so many infinite banking policies that I really enjoyed that intro.
You're like, I got so many infinite banking policies. Like, I know all the agents out there.
Yeah, I guess I've seen what you're talking about, so that amused me.
Yeah, for sure, man. Well, good. All right. So today I'm bringing on Jimmy Vreeland today. Now, he's not just with Vreeland Capital. This guy is awesome. He teaches people how to do BRRRR keys and turnkeys. We'll talk about what that means. But this guy had a military background at West Point, was in the Army. If you ever watch football, if you're a fan of that, you might have even seen him on the field. He's gone everywhere from college to then from the military to eventually get into real estate, where, guys, he does exactly the things we talk about today. And one of the big questions we're going to talk about here is, what should you be quitting your job? If you become financially free, should you be quitting your job or not? And so we're going to talk about that with Jimmy today. So Jimmy, welcome to our show.
Hey, Chris, thanks for letting me interrupt your intro. So I have a bad problem with that.
That's okay. Post edit. We don't even see it. In fact, we'll probably post edit this comment when I say it too. But
all right, cool.
So Jimmy, like, tell us more about your background. Like, you've got a pretty impressive background for sure.
Yeah. So now you could not go back and watch old Army football tapes and see me on the field. So I was a solid bench warmer, but I did earn a varsity letter. I did play football at West Point. After West Point, I became an Army Ranger, went to Iraq twice, Afghanistan once. And in Iraq, the first time, I actually started my real estate journey. I read Rich Dad Poor Dad, and I was hooked. Then first thing Kiyosaki says is, if you want to become wealthy, learn how to sell. So once I got out of the Army, I got a corporate sales job in medical sales. I used a lot of the lessons I learned in sports and the military in sales. And then eventually I was able to start my own business. And that's where we're here today. And then I love working with highly successul W-2 business owners. People are killing it, and they kind of want to see behind the curtain and get through some of the all the info that's out there right now in the internet on real estate. Like, people don't get started in real estate because there's not enough info. They don't get started because they don't find which path is the right one for them.
Isn't that so true? I mean, everywhere I turn, whether I'm looking at Instagram, Facebook, whatever, and it helps, of course, that we have a lot of real estate friends, but it seems like wherever you turn, there's always somebody talking about it. I mean, almost as bad as crypto people, right? I mean, there's tons of real estate people out there today.
Well, sometimes they're the same people.
That's true. Yeah, sometimes they do both, right? Well, I mean, again, I appreciate your service. I mean, that's awesome with the fact that you did 2 tours and everything else too, and you're an Army Ranger. I mean, that's pretty intense training, from what I understand.
Yeah, it was 62 days of suck. Because I always, as type A personalities, you're always like, could I become a SEAL, yada, yada, yada. And then everybody loves that David Goggins book.
Mm-hmm.
And he kind of set the barometer. It's just, He's like, Hell Week at Buds is horrible. And he's just like, Ranger School just sucks. And so I thought he did a great job describing the experience.
Yeah, I noticed that too. I just barely went through that book recently, and he talked about, being out in the wilderness in the jungle of Florida or whatever it might be, or in the hills of Tennessee, and talking about the amazingly bad smell you smell out there. And funny enough, I just talked to a friend of mine who went through that same training, and he's like, "Oh yeah, the smell is like the thing you're smelling is each other. Like we just reek by the time you get to the end of that."
When you have an 8 and 2 months and your body is literally feeding off itself, it creates a lot of ammonia, and that actually, it really stinks.
Well, that's a good thing. This podcast is not like a scratch and sniff, right? That's
Exactly.
a good thing here.
Well, I smell a lot better now, if anybody's curious.
I can attest to that. So everybody, if you ever see Jimmy in person, you'll know he smells great now. I whiff him every time I see him. Yeah, that sounds awkward. But anyways, we're moving on. So tell us more about what you're doing with like the turnkey and the BRRRR-Key, because I know you work with passive investors as well as those are trying to become for active investors as well.
Yeah, so we call it more like semi-active, because turnkey is great. It's a phenomenal wealth producer, but I found after doing it, we've sold around 800 turnkeys, but everybody had the same problem. They started running out of their own capital. So you'd have these people who had like 10 deals and very knowledgeable in real estate, showed up to my trainings for like 2 years in a row. Like, these guys can work a deal. They know exactly what they're doing. But if they don't have enough cash for their down payment, they felt stuck and frustrated. Here's a big secret of the wholesaling world. When you're a wholesaler of properties, all you're trying to do is get the deal deep enough for you to get yourself a spread and for your end buyer to be all in at 80%. And so I just did like some simple math. Like, the goal is to get everybody in at 80%. And if I sell to a local St. Louis person, their goal is to be in at 80%. If I sell to somebody in my program from California, as long as I get them in all in 80 to 85%, does it really matter? And then I let them use my construction team because, one, I want to work for them, and two, I'm better than the local guy in St. Louis doing it. So I was just like, why aren't wholesalers selling BRRRR keys? Why is it only BRRRRs? And then you got Bigger Pockets and all these other education programs teaching the BRRRR and making it like this white buffalo, because I'm like, there's no way these people can passively get it on their own. So I saw a big need in the market. I needed, from wholesaling wise, I needed a buyer for that product. So I was just like, why not combine them together where everybody wins? And that's a BRRRR key. So it's a rental where my team does all the work, but you're all in from 80 to 85%. And then you go to the bank, refi all your cash out. And so you're not in the same problem of a turnkey where you're running out of your own capital. Because I also show people how to raise private money. So raise private money, use other people's money to buy the house. My team fixes it up. You refi it out, get your 30-year fixed mortgage, and then start over and do it again. So it's also a much faster way for people to get a rental portfolio.
Yeah. Now, I've had a few people on the show. We've talked about, doing rentals, whether it's turnkey or otherwise, right? How do you feel with this environment right now? I mean, obviously the interest rates have been higher for the last few years. How have you had to adjust the strategy, or have you had to adjust it at all?
I've actually did. So I do case studies for people we manage properties for. And so every time you get a lease renewal, I'm like, we've got it systematized. Like, boom, we give you an example of how your portfolio is performing. And consistently, every case study I look at people, and then in their case study, I also show them what their return would have been if they had been just invested in a S&P index fund. And consistently, our clients are making over 300 to 400% what they would have made in the market.
Wow.
And so that's really, it's regardless of interest rates, because they're raising interest rates because they're worried about inflation, right, Chris?
Right. And
because there's such an inflation worry, what's that almost guarantee for real estate?
Well, it's going to guarantee to boost up rents.
And it's going to boost up rent and most likely give some price security.
Right.
And so I love like giving what the market will take me. So I am more secure in saying, hey, look, over a 10-year period, this house is going to appreciate 5% a year. Like, that's half of inflation, what is projected right now. So buy this as a cash flowing hedge against inflation. And so the other thing is, these people have been with me like 4 years. I got a couple clients that are up $500,000, and about 20% of the return is in cash flow. The rest is in equity pay down and appreciation.
Right.
And so this is the great thing about 30-year fixed mortgage is leverage amplifies returns. So if the house appreciates 5% and you only put 20% down, the appreciation is you made 25%. Exactly.
Yeah.
And so, no, as long as my stance has been, as long as the interest rate's fixed, it doesn't matter.
That's the key, right? None of this variable home equity line of credit crap. It's really just fixing that 30-year fixed.
And then especially if you're a business owner or a W-2, I'll tell you, I know as a business owner, I get my money from private money. I have to like grind teeth to get bankers to give me money. I can get hard money lenders to give me money all the time, but long-term fixed financing is not easy to do. When I get a 30-year fixed mortgage now, I don't show them my business returns. I show them my W-2. The bankers want to see your W-2. And so the hardworking, highly successful professionals that both you and I work with, I just love showing them how to fully leverage that W-2 they have from either their business or from their place of employment.
Yeah. Well, one thing I know that you've mentioned to some of my clients as well, is that you've got some different programs, even help, even on the 30-year fixed side, don't you? For those that are members, that are paying members of your organization, right?
Yeah. Since we we do so many deals a year, I'll buy down a block of capital. And so right now, everybody inside my program is getting, if the market interest rate's 7, my guys are getting 5.
Wow.
And then
awesome.
I ran those numbers out over 10 years. That's a $25,000 savings.
Yeah.
Just that 2-point difference.
Not to mention the cash flow profit is bigger too, which gives you more safety in case anything goes wrong. There's repairs, maintenance, vacancies, whatever. That gives you a little extra buffer too.
Well, and then all that profit is the cash flow difference.
Yeah.
Because appreciation doesn't change regardless of the interest rate, kind of what we already talked about.
That's right. Amen to that. That's awesome. I remember when you told me that for the first time, I was like, are you serious? Like that should not be a secret. And I know you tell people that too, but that's something I think is just tremendous because you really don't see, that's the number one concern I see with many of our clients is, yeah, but the interest rates are higher. Do I wait for them to drop? You're like, why wait? Why not just get them low now?
Well, I've done the math on that and it doesn't pencil. So like, let's say you're like, oh, rates will go down in a year. Like what you gain, you're losing that year of appreciation. You don't want to do that.
Right.
And so I think give me your thoughts on this. I think it's a hypothesis that you're running with. Like the hypothesis that I'm running with is that the American dollar is getting destroyed. Inflation is going to be part of our reality for a long time. This is not going to be a short-term fix. And the fact that we have such a housing shortage in this country right now, like I don't see any price softening for a long time. And so if you're fine in believing that, hey, at a minimum, the median home price in the United States is going to stay with the latest 75-year trend of 5% appreciation, then, you use cash flow to make sure it's at least breaking even year one. But your long-term play is that appreciation and using leverage to get 4 times on your cash on the appreciation.
And you don't just get appreciation, but when the rents also go up each and every year, right? And they've been going up way more than people expected the last few years. They thought everybody's like, oh, it's going to stop. It's going to come to a halt. Nobody's going to pay higher prices. Guess what? They're all paying higher prices.
Tell me what you think about this. I had the weirdest deep thought over the last week. So you were in CG meetings when Larry Yach was talking about success, right?
Uh-huh.
So for your audience, a great book is How Leadership Actually Works. And it really helped me like personally and in my life. And then hired Larry as a coach. But so Larry says, if you seek accomplishments, you probably won't get fulfillment, but you maybe will get accomplishments. But he's like, if you seek fulfillment, you are going to have to accomplish things to be fulfilled. So there's a good chance if you aim for fulfillment, you get both.
That's right.
And
seek fulfillment, you will accomplish something.
Yeah. And you'll get both. You'll get accomplishment and fulfillment, which is high achievers we all crave and desire. But tell me if this translates. I might be stretching this. If you seek cash flow, you're probably not going to get that wealthy. But if you're looking at wealth and you want all the 4 pillars because of inflation and time and rent rising, you will get cash flow, you will get appreciation, you will get leverage pay down, and you will get tax advantages. You'll get all the 4 pillars of real estate.
I can see that, especially in this strategy where we're talking about here. Yeah.
Too
Which
deep?
that's not always the case.
Too much of a stretch on that metaphor, or do you think just right?
No, I think I can see that because like, for example, if you're always seeking cash flow, you might there's times that, we have clients look at debt funds, right? And they might say, we'll pay contractually 10, 11, 12% a year, but there's no growth on that money, right? And there may not even be tax advantages, which you also get on the real estate side when you buy a rental. But with what you're saying is, if we aim for this, even though the cash flow might be less now, right? But if you aim for this, you not only get the cash flow, which is inevitably going to happen, you also get everything else with it. The appreciation, the mortgage buy down, which creates more equity. You get still tax benefits as well. You get all the above.
And because what I saw people fixed on cash flow. I was like, all right, bro, you want cash flow? I'll sell you a C-class asset. They'll turn down a $200,000 house, which is guaranteed to be a wealth producer, for a $100,000 house in a C-class area that they bought for 80, but was renting at 1,100, and they're happy. And I was just like, okay.
Yeah. It's like those Ohio properties you always hear about, right? They're like, I bought it for $50,000. It's still worth $50,000, but I make, $600 a month cash flow. It's like, well, that's good, but that property will never really grow at all. It's just, you're just making cash flow and that's it.
And then some people, that's their, get rich in your niche. And I know plenty of people crushing it on both types of deals. But what I like for my job to be is to just be like a real estate buffet and explain options.
I love it. That's awesome. Now, one thing that just popped in my head here, because we were joking about it, like it's probably got cut out in post edit and everything. But I know you're a huge fan of infinite banking. Like, you've got a lot of money sitting in infinite banking. Here's the debate I always hear people talk about, especially in the real estate game. They're like, why would I slow down my growth to go do infinite banking when I can just go and invest and buy as many properties as I can? What do you see as a purpose in your own life for infinite banking?
Well, one, like, for a real estate guy to say that, like, I never use my own money to invest in real estate. Like, that's one. My job as a real estate investor is to be highly liquid. That's another reason I don't use my own cash to invest. I borrow private money, I borrow from banks, but real estate never fails. If you look at the crash in 2008, all the houses that everybody got foreclosed on are now worth 3 times their value. So it's never the asset that fails. It's the borrower's liquidity that fails.
So true.
So as a real estate investor, especially as a small business owner, you have to be liquid. And so I'm not that comfortable keeping money in a bank, but because there's just no return. But if I can insure my losses, if I were to, the greatest worst economic thing that could happen to my family is, like, I'm the primary breadwinner, is that I'm no longer around for them. So the fact that I can insure that loss and have liquidity for my business in the same thing and get a tax-free return, that's why I put all my liquid cash in life insurance policies. It's
really your war chest is what it is.
This is from the seam to lab. It's from the black swan. But when risk of ruin is present, rate of return is irrelevant.
So true.
I can't stand people comparing their investment based off their rate of return. Because that's only potential high side. Like, at what risk is your capital at? That's a very important thing when you want to brag about your investments.
Right. That's true. I was talking with one of my employees, and she's in her 20s, and she has these classmates that are now, one of them has become this Bitcoin millionaire, right? And he's talking about, he's like, oh, I've made so much money. I will teach you how you can make millions in Bitcoin too. And both of us were like, all right, we'll see how long that lasts for, right? Let's see how long he rides that little wave before all of a sudden he's no longer a Bitcoin millionaire, right?
Well, it's been my experience that the people making millions in Bitcoin are teaching people how to make millions in Bitcoin.
They make their money from teaching people how to do it, not necessarily doing it themselves, right?
Yeah, I mean, I think there's some ingenious stuff going on as far as how mining is happening. That's pretty cool. That's interesting to watch. Like, as someone who loves human creativity, like, I've heard of a guy who is taking capped natural gas wells, releasing the gas, which spins the turbine, which gets the computers to move to mine the Bitcoin. Like, that's entrepreneurial creativity. But just speculating that this currency will go up and down, it's not investing, it's speculating. And there's nothing wrong with speculating, but you got to know you're speculating.
Yeah, you're gambling at this point,
Yeah.
And how do you define investing in your eyes?
So this isn't for me. This is from the greatest investing book ever. It's called How I Lost $1 Million in the Stock Market. But the guy, it gave such clarity to my brain because I read it when I was just getting into this. But investing is departing with capital with the expectation of return over a long period of time in dividends, interest, or rents. And then he goes into speculating. Speculating is buying for resale. It's buying so that you can sell it at a higher price. And, that's kind of my business. I do all of that. Like when I flip a house, I speculate. When I wholesale, I'm trading. When I buy a rental, I'm truly investing. So I also don't like in the real estate education space. They're like, become a real estate investor and become a wholesaler. I'm like, no, dude, you're an active business owner in real estate trading. You're not an investor. And then, most flippers are called investors. We're all speculators.
That's right.
Nothing wrong with speculating.
Just call it what it is.
Yeah, you got to know what you're doing.
Yeah, that's right. Oh, man, this has been awesome. Time is flying by way too fast here. If people want to find out more about your real estate stuff that they can, whether they invest in it from an education perspective or buying rentals from you guys, what's the best way they can follow you or be able to get more information?
YouTube or Instagram at just Jimmy Vreeland. V as in Victor, REELAND.
Awesome. Yeah, we'll put that in the show notes too so people can get that.
Yeah, Craig has my cell phone, so whatever Ripplers are interested, Craig just usually sends a group text and we just start talking from there.
Sounds awesome, man. All right. Well, again, appreciate you being on, and this is awesome. I learned a lot myself just talking with you today. So really appreciate your time.
Dude, check out. Have you ever heard of that Lost $1 Million book?
I haven't. No, now I got to find it.
Check out that book. It is awesome.
Yeah, sounds like it. Well, everybody, definitely check out Jimmy's stuff, and then hey, figure out how you can lose $1 million too. There's a book on that as well. So everybody, make sure you go and not just listen to what we're talking about here, but find a way to actually take action. That's one thing that Jimmy said early on. It's like you can listen and watch influencers all day long, but it's about what you do with this information that makes the difference in your life. So go and make it a wonderful and prosperous week. We'll see you later.